Hello everyone and welcome to day 2 of the crypto trading course. My name is Alex Winkler and today we're going to review what it takes to succeed in trading crypto, and we're also going to review what it means to be accountable, which really just is the importance of documentation. Here's one of these quotes that I really like: what gets measured gets managed. And the reason I like that is because it's so important that whenever you're doing something that you kind of have documentation to show the progress, even if it's a simple analytics campaign for running traffic to a website, or if it's fitness and you're going to the gym, you want to measure your progress. If you're not measuring your progress, you won't know what's working, what's not working, and you kind of get stuck. So that's what we're going to review today, how to do all that. Again, the single best way to guarantee success is being accountable. So in the upcoming days, you're going to notice our obsession with that. It doesn't just help you with trading from entry and exit points, but it also gives you a chance to review everything you do. And that is really the importance, because over time, you can always look back and you can always learn from it. If you're not keeping track of your progress and trades, you're going to start deviating from your strategy and your plan, and it's going to get pretty messy. So therefore, in this chapter, we're going to also be diving into building an Excel spreadsheet to document all your trades. And on day 3 and 4, you're going to actually see a lot of that live. But for now, we're going to make sure that everything's set up. So once we get to the trading, you're going to be ready for it, and you're going to have your Google Sheets ready to go. We're also going to review some things that will make coming tax season a bit easier for you. So to measure the gains and losses, we use cointracking.info. If you use this link right here, you get 10% off. I'm not sure what I get. I think it's also like $10, $15 or something like that. Anyway, this site is pretty cool. So I guess one of the benefits of using this site is that you can see all your oversight, everything right away, kind of your account balance, where all your coins are. They have a pretty nice section where you can see your gains, your losses. I used to use this quite extensively, but now I mainly use it just for accounting purposes. So every maybe 1 or 2 weeks, I go in, I update the coin tracking, and just so come tax time, I have everything we need for the company, because we do use crypto to pay out affiliates, and there's a lot of documentation on that. So that's great, but it's also nice if you have many different crypto accounts or exchanges. You can kind of see where everything's going, what your overall balance is. It gives you a really, really nice overview, and I think that's really important. So I said here we'll constantly be referring to this site throughout post-trade strategies and analysis, but I've actually wandered over to using my Google Sheet a lot more. I really use cointracking.info in the backend, and it's something I used to use a lot, and now I do it more for accounting purposes. I also have 2 accounts on cointracking.info, one for the trading fund and one for the investment fund. They're a bit different, and I like to separate them. Also, one is personal and one is part of the company. So yeah, completely different. For now, for you guys, having one account there is completely fine. It's completely free to use, up to, I think it's like 100 or something like that trades. It's, I mean, plenty fine for anyone getting started, so definitely check that out. Next, we're going to dive right into learning the rules. So every trader or investor needs some sort of guidelines, or you're just going to get overwhelmed by all the different choices out there. Even just the different time frames on a chart will make you come up with 1,000 different ideas. So it can get very dangerous, and you can start overtrading pretty easily, just because you have different chart sizes or too much stuff. We're going to dive into that. So yeah, here's another example. I've always been pretty wary of people's strategies who have more than 1 or 2 things in a chart. So when you see a chart with 3+ indicators, that person probably is a bit confused on what's going on, because each indicator is showing completely different kind of entry and exit points, right? Your RSI, I don't even really want to name them because it's nice to know, but we're not going to be using them all in this course. But one indicator might be saying buy, the other one, depending on the trend, could be a good time to sell. So for us, it's all about price and volume. So in the end of the day, price is always the best indicator. In day 3, we're going to dive really, really heavily into why and how to read the charts based on price only. Everything else is just a derivative, right, of price. So if you can read price, you don't need all the indicators. Let's define our strategy. How are we trading these currencies? So we're looking for momentum plays. We're trying to ride the action, and these are plays we can just do over and over again. Chart patterns exist for a reason, and it's because you see them time and time again, and that's what we're trading. That also doesn't mean that if you see one chart pattern, it's going to happen again, right? It's more of a probability game, right? If everyone sees this happening or see this pattern, then there's a higher chance it might happen, or it kind of sets the stage for an event to happen. But nothing's guaranteed, nothing's an exact science, so that's why we have these rules to know how to play any of these scenarios. Right, so as I said, that does not guarantee anything. What it does allow us is to open a position based on a high probability and good risk reward. If something does not go right away, go right your way, cut your losses and look for the next best setup. It's that simple. There's nothing wrong with a loss. The best traders out there only win about 70% of the time, and you can even be profitable with a 50% win or loss ratio if you're good at cutting your losses. So that's really what it's all about, sticking to your rules, and that's why cutting losses is our #1 rule. You'll see in a second. So for day trading, I'm usually looking for plays under 24 hours. I'll usually be buying on large dips, or I'll average out, or I'll average in before a breakout from a key resistance level, and or consolidation, such as a separate pattern, right? And I'm always looking for a solid 1 to 3 risk ratio. And what that means is, where's the support line? How much can the price go down potentially, right? Before it goes up, and how far can it go up? So I want kind of a good ratio where I think there's a bit of a safety net. I mean, obviously support levels don't always hold true, but if you could kind of always have a solid risk reward, you're going to have a lot more wiggle room in your trade, and it's going to be a lot more comfortable. So diving right into the rules, the first one again is cutting your losses quickly. Don't let a small mistake ruin a whole entire week. I honestly can't emphasize that enough. I have plenty of examples how that happened, and that's just #1. We'll leave it at that for now. So the second rule is follow your initial strategy. Don't let any one trade turn into investment, right? That's not cutting your losses quickly, or kind of, well, maybe this trade will turn into this, or I don't really know what's happening anymore, but I'm just going to hold, and maybe it'll turn out. If you're getting into a situation where you don't really know what the price is doing anymore, just get out. You're playing with fire at that point. So rule #3, we're looking for solid risk reward ratios, 1 to 3. #4, we want clean entry points. So this might be kind of hard to visualize right now, but on day 3 we're going to review a lot of charts, and we're looking for clean chart patterns that we see over and over again. If there's something just kind of going up and down and circles, we don't want all that. And we're playing a guessing game, and scalping. It's very dangerous. We want to be trading patterns that we know, and that we know are profitable again and again. So that kind of leads me to my next rule, and this is avoid scalping, especially if you're new. I scalp. I think everyone scalps from time to time. It's like a really bad habit that you can quickly get into. But on average, you might win some here and there, and it can feel good because it's quick cash, but it's kind of distracting. It's super time consuming, and one mistake can wipe out all your other scalps. So it's just on average not the best idea. And the rule number 6, this might be a little cliche, but don't break the rules. It will happen where you don't cut a loss quick enough, or you end up kind of getting into a choppy position, or the risk reward is maybe 1 and 2, or even worse. Just know you're breaking it, and if you really want to get into it, then at least use a small position size where if a loss happened, it wouldn't really hurt you and you'd still be able to get out. But refrain from that as much as you can. So the best thing you can do is honestly print these rules out, make them your desktop background, write them on a sticky note, put them somewhere on your desk. I actually have my rules written out right here. They're the exact same ones, but I like to review them sometimes, especially when I wake up really early in the morning and I'm seeing some really good trades, and I'm like, wait, hold on, I'm over trading right now. I haven't even made my watch list yet. This is crazy. That's one problem with crypto, is the markets are always open. At least when I was an equities trader, I'd have till 9:30 to relax a little bit and kind of eat breakfast. But crypto, you're just like, it's crazy. If you repeat these every day before going to bed and the first thing in the morning, I won't judge you. All the more power to you. Being really true to your rules and your strategy is so important as a trader, and you'll definitely learn that over time. It's also good to write these on a Google Doc, as I mentioned before, or a piece of paper. I actually added them to Excel sheet that we're going to go through later, so you'll already have them right there. And you can always add to your rules. Maybe make a separate section called lessons, kind of constantly be writing down what you learned, and it's really important to kind of grow. And that's really where the rules come in. It gives you a framework to grow off of. So what's the importance to sticking to these rules, right? Why don't we just get right into it? Well, trading without rules and strategies is like playing chess, but all of you have ever known is playing checkers. You're going to see a lot of cool pieces. You're going to want to touch all of them, and before you know it, all of your pieces are gone. You're going to be upset, confused, probably pissed off at the other player, think everything's rigged, and you're never going to want to play chess again. And that's pretty upsetting, because chess is awesome and you're going to miss it the rest of your life, because that left a bad taste in your mouth. So you're going to think chess or the market is not for you, when in reality you just kind of jumped into it a bit too quickly. You also never want to trade when you're sick, stressed, tired, drunk, hungover, you name it. If you're dealing with real money here and you want to be in your best mental state as possible, or you will lose money. Last month is actually a pretty good example. I was almost all those things. Well, I was stressed. I wasn't drunk or hungover all the time. I was traveling a lot and I was visiting a lot of family and friends, and you know how that gets. But overall, I was a bit stressed. I was moving. The company was doing like 1,000 things. I was working on projects. I was building up this site, and then on the side I was trading, but my mind was always somewhere else. And you can see with my trades, I basically broke even, which thankfully, but kind of a waste, and that was really because I wasn't in the right mental state. So I'm not perfect. Let's see, I don't stick to my rules all the time, especially when it comes to scalping. That's probably my worst problem. So I always let my chat room know if I'm going into a scalp. I also use smaller positions for a scalp, but luckily with my schedule and most people's schedules, it doesn't really allow time for scalping. I know most people that are new to crypto or new to trading, they'll tell me like, Alex, I don't have time for it. I wish I could dedicate a whole day to it. Well, the beautiful thing is you don't have to dedicate a whole time to it. If you just wake up in the morning, make your watch list, set some limit orders on some plays that you're really excited about, that's all you need to do. Those are usually my biggest gains, where I'm really kind of looking at the bigger picture. So it's pretty amazing. Overtrading and scalping really won't move you forward. Also, in equities, is kind of funny because scalping is extremely difficult, especially if you're or overtrading, especially if your account is under $25,000, because you're not even allowed to make over 3 round-trip trades in 5 business days. This is with equities, not crypto. So talk about preventing you from trading. Crypto does not have that. So crypto requires a lot more self-discipline. In crypto, you just go on an exchange. Once you're verified, once you're approved, you can make all the trades you want in that day. Besides the fees, there's really nothing stopping you, I would say. We are all different. This is a good point. We're all different as a trader, and you will become better over time, and you're going to be able to customize your rules. You're going to figure out really your style and what works for you. If you're new, kind of refrain from trying to make up your own style too quickly. What I'm doing is proven. It's consistently making me returns, and it should work for you too. Nothing's guaranteed, of course, but over time you're going to specifically notice what patterns you're best at trading, and that's really the most important part. And then you can take more risk on exploring those opportunities and kind of leveraging that. I've learned from several traders, and I've been part of several chat rooms, and everyone has a different style. So some people are great at shorting, let's say, but some suck at buying breakouts, and some are the exact opposite. So you'll really learn a lot about yourself when as a trader and an investor. And you're gonna figure out your favorite setups and really kind of what your style excels in. So that's gonna be a pretty fun learning experience. But be careful not to take too much risk before building up a solid foundation of experience first. Yeah, you might have a small account and think it's not worth it just to use half of my size right now. But think about it like this: you might make a small gain within a small account size, but you're also going to make small losses. And if you're new to trading, you're going to probably make a lot more mistakes at first. So there's nothing wrong about a small gain, and there's definitely nothing wrong with a small loss. So keep it simple. Wait till you've kind of figured out what works for you, and then as you kind of feel more comfortable, increase your position size, gradually. Let's see, where are we? As a new trader, really, and as a trader always, even 10, 20 years in, I know people that do even more studying than I do, right? So you want to focus on learning always before anything else, through small trading, trading good plays only, watching video lessons, studying chart patterns, always reviewing your past trades. It's just constantly reviewing. It's like anything you do, anything you want to get better. It's just the more you do it, the better you get. And learning from your mistakes and your wins too, right? That's where the documentation comes in. Also, this happens to me a lot too. Sometimes you might feel like you're not trading enough because sometimes the rules are limiting some of your entries because maybe it's too choppy and you shouldn't trade, and you're like, I should trade because I need to get better. It's actually a good thing not to trade. Sometimes the best trades you'll ever make are the ones you don't take, right? Because there are such things as losing money in a day or a week or a month. So you don't want that ever to happen. It's really dangerous, especially after you make like maybe 10 good trades in a row. You get more risky, and then there's a lot more chance for a mistake. So you want to kind of be consistent. You don't want to get into any bad trades because you're going to break all your rules, and that you just don't want to be part of that. Actually, there's a really good example trade here. This is when I first started documenting, and right away I had a horrible trade. I was 20% down before I cut my losses. This actually could have been a profitable trade. I should have got out. It was looking messy. Since this was an investment trade, I figured I would hold it for a bit. Anyway, I didn't really stick to my rules. I should have cut it when it was about 2, 3, 4, 5%, but I just kept holding. Before I knew it, this price, this coin was still in free fall. I eventually cut my losses, which was good because it fell even further. Eventually, it did rebound, but you never know how far it's going to go, and you don't want to let that happen to you. So move on before I get depressed. It's always here for everything is fully documented. So just go to this course, day 2, and you'll see the link right here. So one way to stick to the rules is by documenting each and every trade before, during, after, right? So sometimes you may hurry into an entry and want to get in and skip the documentation, but I'll tell you now that it's almost always better just to document it ahead of time, or at least doing it while it's happening. I admit I'm not perfect either, and sometimes I get into an entry before I document it. So it's hard really always sticking to it. Also, I'm creating alerts and I'm posting in the chat room. I'm setting up push notifications, so there's like a lot going on. And sometimes I do my documentation after all that because I want to get the alert out right away. Either way, diving right into a trade without thinking twice about it is usually not too good. The next section, we're going to dive right into how to document all your trades and how it's helped me. Stay tuned for that, and I'll see you guys there. Ciao, ciao.